and welcome to episode 15 of our Walk in My Shoes series, where we will be looking at the real impact of the pandemic on climate change and the reaction of the global philanthropy and impact investing space. We have all seen and heard the reports that there has been a reduction in air pollution due to less flight emissions, for example, but today we'll be exploring what does this really mean long term in the fight against climate change. In addition to this, what has the effect of COVID-19 been on the availability of funding for conservation and the environment, and has there been an impact on the growing world of sustainable finance in the fight against climate change? So the great pleasure that I introduce the chair for today, Seb Beloe, and he is partner and head of research at WHEB Asset Management. And joining him today is Joel Moreland, Philanthropist and Angel Investor, Joanne Etherton, who's the climate finance lead at Clientearth, and Colin Baines, who's the trustee of a charity called Possible, but also investment engagement manager at Friends of Provident Foundation. As always, this is a strictly 30-minute session, so please be respectful to the discussion, the panelists and each other. Please use the chat function to ask questions and introduce yourselves. I will also put a link in the chat to our LinkedIn group where you can come and join us afterwards and perhaps connect with the panelists and other audience members there. I will now hand over to you, Seb, to kick off. Oh, we've lost Joel. Oh no, we've lost Seb.
Well, hello everyone.
Well, Joel's going to start. I'll see what's happened to Seb.
Welcome. Okay, so I'm a complete amateur around climate and climate issues, so treat me that way. And maybe we could start off with Joel. Joel, what do you see some of the issues related to climate change now, and do you think that things will really change?
Well, I think what has been the silver lining to a terrible COVID crisis is that we've really seen that things can change very rapidly, and that if governments put their mind to it, they can put it in a bicycle lane within a few weeks rather than months. And I think that for me as a green investor, that gives a real an opportunity, and I see a lot of interesting investments that could take off now if governments really grasp this and build back better in their stimulus packages.
Colin, what do you feel?
I think it's shown that we can change behavior quite quickly. So for instance, well, Possible is calling for car-free cities and has a campaign around that. That would have perhaps been pretty unimaginable not so long ago, and now pop-up bike lanes are popping up, and all sorts of things really that are happening that not so long ago would have been perhaps considered a bit out there. Similarly with things like working from home, the sort of the hellish commute every morning and every evening, it doesn't need to be like that. And apart from all the climate benefits, there's mental health benefits, people can save a bit of money, stress, all of that stuff. We can roll all of these things together a bit more now. I think perhaps going forwards, we should consider integrating these social issues more into, how we address climate change, whether that's from the philanthropic perspective or from the investment side. There's lots of opportunities there in terms of bringing social and climate together.
So I'm not prepared for that, so I'll continue. But can I just be a bit cynical for a second? I mean, if we think that change is taking place, why are the beaches so full of people not keeping 2 meters apart? Do you really think, Colin, there's going to be a change based on that?
Well, I mean, we're seeing elsewhere where the economies are opening up again that emissions are springing back to not far off what they were. So it's not necessarily, we leave it as business as usual and we'll probably go back to business as usual. But there is an opportunity there to step in and actually try and bounce back better, and actually we're facing this huge recession, or we can seek to address that in such a way that we address climate change at the same time. These things shouldn't be too out there.
So Joanne, is the glass half full or half empty?
Well, I think there's a lot of opportunities, aren't there? But I think as a lawyer, I look at this and I think, well, gosh, COVID has shown people that actually risks can have quite a significant effect on the economy and quite quickly. And therefore, I think it makes opportunity for people to say, actually, as we build back, we do need to think about resilience and sustainability. And I think it might make people think about climate as an issue, because people have known for decades that climate is an issue, but they've always seen it as sort of something in the future. And maybe just the fact that COVID has come, and people had predicted, hadn't they, some sort of pandemic, but I don't think anyone really sort of thought it was going to happen and be such a global issue. So I think it may help people to actually think about these things as a reality.
Okay, Seb, can I turn it back to you? What we found is, speaking initially, is that the glass is half full and starting to fill up. So over to you now.
So sorry, Joanne, you've just answered the question about the impact of COVID-19 on attitudes to climate change. Is that right?
It was a broad question about whether the glass was half full or half empty. I think people were thinking more generally about, what can we learn? And I suppose I was saying, actually, it's another risk. And as a lawyer, we like to often think about risk and help people think about long-term impacts and that sort of thing.
And Colin and Joel, have you both? They've
both spoken, yeah.
You've given your views as well. So maybe I can just ask, Colin, in your role at Friends of Provident, have you seen, certainly from our perspective as asset managers, we've seen a kind of real growth in interest in kind of ESG and sustainability more generally. What does it look like from your position in the asset owner world, and do you think COVID has helped asset owners kind of come to terms with ESG more quickly, or has it been a distraction, do you think?
Well, as asset owners, we've for a long time been wanting higher standards of ESG integration and engagement, and more impact investment, and to actually portfolio-wise look at the impact of the investments, both environmental and social. I think what the pandemic's done is put the S of ESG firmly on the agenda. And what we would like to see is actually the E and the S being much more addressed at the same time. So, I mean, issues like just transition should be on the agenda much more now. We can look at issues like quality of jobs, security of jobs, executive pay ratios, all of these sorts of issues can be brought into business strategy that deals with climate change.
So it sounds like you feel like COVID-19 has kind of broadened the agenda, has kind of put more focus on the S part rather than necessarily raising it up people's agenda, or has it done that as well, do you think?
I think it's probably done a lot. I mean, Black Lives Matter is going to have an impact as well on the ESG kind of agenda when it comes to diversity and, in work progression and all these sorts of issues. So hopefully with like 3 major issues hitting, within a 12-month period, hopefully the ESG as a comprehensive, integrated approach and impact more generally, hopefully it's all up the agenda. I mean, as asset owners, we desperately want to see this taken more seriously. I mean, ESG's taken off a lot over the last couple of years. Whether the practice matches up with the marketing claims, the jury's not out. It's just not, it's not happening. Right. But we would hopefully, we'll see a little bit more serious action from asset managers in integrating these issues.
Yeah. And Joel, how about you then? I mean, your focus, if I'm right, is more, well, certainly my experience of your work has been more around climate change. But how do you think COVID, does it sort of accelerate? With some, I was reading this report recently that the IEA was saying we basically have 6 months to put in place the kind of policy and regulatory infrastructure to deal with climate change. We've worked together on Divest Invest. Do you think COVID-19 has come at exactly the wrong time and has derailed efforts, or might it be a bit of a kind of a springboard for more serious action?
I think, yeah, there's lots of parts of that, and I'm wary of the time. I'll dive in really quick. Is that we've seen like environmental funders network has talked to environmental groups, and obviously they've had huge impacts in terms of COVID and how it's enabled them to campaign. There's some blogs on their website on it at the minute if people are interested. And so I think as funders we have to be very aware of supporting groups through this difficult time, but it's also a massive opportunity, as I was saying earlier, and anybody who's been involved in climate long term, like you, me, Colin and Joanne, knows that it's all about the S, the social, as well as the environmental. The biggest threat to everything, whether it's arts heritage or education and all these things, is wrapped up in climate. So it's a massively social issue as well as an environmental one. Mm-hmm. And so I think this is a difficult time for those who are campaigning and trying to change systems, but it's also a massive opportunity, as I was saying earlier. And as Colin has said, absolutely, we can link the social and the environmental closer together and see that the planet needs healing, and people understand that.
Can I just jump in here, because I think there's one really interesting point, because I think a lot of people have thought about this being the decade for dealing with climate change, but I think when you see the huge amount of money that is being poured in by governments and other public bodies, it just makes me realise that we've probably got quite a short amount of time to actually focus the money on resilient, green, recovery, healthy investment, not that longer period that maybe we felt we had. I don't know what others think, but it seems to me as if there's so much money piling in now that a lot of the investment for the next 10 years is actually happening in a really short time frame.
Does anyone else want to come in there?
Yeah, well, I agree. That's the opportunity, and it's important to make the distinction between money going into secondary markets, so buying shares and bonds that are already issued, as opposed to actual new money. And what we really need to see is pension funds and big pools of money, charitable funders putting their money into new investment in green and early stage investment. And absolutely, yes, we could all say, well, the governments need to put the policy in place, and we've all been saying for decades we need a carbon tax. But there are absolutely investment opportunities out there now, just on the transition that will happen. For instance, with renewable energy being so cost effective in so many places, that's an absolute investment opportunity without government regulation. And charitable funders who are looking to align their grant making and their investment can really pick up some opportunities.
Yeah, I was just reading the German, in Germany, their stimulus package, they've significantly increased their targets for offshore wind and solar, but they're not having to provide any subsidy, because they basically, their assumption now is that gets built just without a commercial rate of return, without needing any additional subsidy. So that is absolutely part of the response. Joanne, I'd be interested in just to come back to a point that Colin made about ESG and marketing, and whether it was still just kind of messaging and marketing, or whether there was more fundamental change. And from your position at Clientearth, I mean, I'm curious to hear whether you see something more fundamental shifting within the asset owner community and with pension funds. Do you think this is still at the level of public relations and messaging, or is there something more fundamental changing in terms of their attitudes to climate change and broader ESG issues?
I think over the last few years, there's been a significant journey that the pension funds and other asset owners have taken. I think from thinking that ESG is an ethical issue to realizing, that actually there's a financial issue here. And obviously our focus as lawyers is very much to think about, what does the law say, and what obligations have you got, and how should you be thinking about those duties and legal things. But I think there has been quite a change in people's attitude. I think people are understanding these things more, people are considering it. What we need to see, though, is possibly more of an actual action. So I think there's been a lot of discussion around boardrooms and tables of trustees speaking, but whether they're actually taking those actions, that's where I think we still need to see something concrete happening,
Right.
so that people are actually, you know, involving these things in their mandates and actually looking at their asset allocation. And I think importantly, using all the tools. So thinking about their voting and their engagement. That's what I'd like to see people doing.
Okay, so you're in Colin's camp. It's still marketing and messaging more than anything more substantive at this stage, at least.
I think there's a move. I think there's some leaders who are doing more and coming up with strategic plans. But I think a lot of people are thinking, or, you know, as long as I'm along with the crowd, as long as I'm doing broadly what other people are doing, I'm safe.
Okay.
And actually, we need a few more people to be a bit more progressive.
Okay,
a lot more people to be more progressive, actually.
I'd say there's a huge role here for mission-led asset owners, whether it's philanthropists or trusts and foundations, in establishing what good looks like, you know, good practice as opposed to the marketing claims, and actually getting under the skin of those asset manager claims, and, you know, sort of driving it forwards in a very sort of transparent public way and saying this is what good looks like, this is what bad looks like, and putting that pressure on the asset managers to do what we want with our money, you know, and to establish those new norms, new market best practice, and then eventually that best practice helps to set the tone for any legislation further down the line, or, you know, just avoiding the brand risk of large fund managers greenwashing.
Right. Have you? I'm just curious. Sorry. I don't know whether listeners are familiar with the initiative that Colin took at Friends of Provident, the ESG Olympics, where I don't know if you want to say a little bit about that, and then what's happened subsequently. Have you had other asset owners get in touch with you to understand how you did it and how they might do a similar kind of thing?
Yeah, well, because of this problem, we thought we would do a tender for new managers in a very sort of public, transparent way. And we put out an open offer just saying, come and impress us with the environmental and social impact and integration that you have. And we had this open competition, very public. We had 60 submissions, you know, from the small boutique impact investment management all the way up to like multi-trillion-pound global banks and everything in between. And we basically in a public way said what was good and what was bad. We haven't announced the winner yet. The event was at the Royal Institution with 100 like-minded asset owners, and the shortlist that presented was seriously put through the mill. We're going to do a report on it to keep an eye out in July, basically, to look at the trends. Where the sector's improving, where's the gaps, where greenwash is still rife, and what asset owners actually can do to try and engage with this whole issue publicly to drive up them standards.
Very good. We've had a question from one of our listeners about MiFID and the FCA regulations that are coming into place around ESG regulations that the FCA is bringing into practice later this year. And the question is, how well or badly do you think the fund managers, product managers are going to respond to this? Do any of you have a strong view on that?
Yeah, I'm always up for a strong view. I think there is the regulators, despite how hard Clientearth and others have been bashing them over the head, are really playing catch up in terms of tackling these issues. Looking off, you know, the Mark Carney's said a lot, and the Bank of England at a high level has done a lot. But in terms of the actual practicalities of regulating the financial system, they're very much at first order effects at the minute. So you look at a company and go, well, if there is a carbon price and it's at £10 a tonne, what happens? What's the value? What's the risk here? But there's very little, and this is true of the investment management industry as well. There's very little looking at the second order effects and beyond. So if the wet bulb temperature, which is already getting above human habitation in parts of the Persian Gulf, that's going to push over the next decade alone, and then much more in the future, huge amounts of migration. And many of the financial models used by both the city and the regulators and the government don't take that into account. They don't take into account the effects of failing agriculture. They don't take into account what that then does if you've got failing agriculture and high wet bulb temperatures and people can't live in areas and there's lots of migration. That causes piracy. That affects international shipping. None of these impacts are factored into the models that people are using to manage your pensions or charitable trust money. And so I'm sorry, I don't really have much confidence that the regulators tinkering at the edges is really taking this on board. A more considered response will probably come from the other panelists.
No, that's helpful. Joanne, do you have a view? I mean, there's a sort of, I don't know, the legal.
I mean, I think that we've seen progress from the regulators. You know, if we think where they were 2 or 3 years ago, you know, they just didn't seem to see this was within their remit. So I think we're taking some small steps. I think the concern I've got is in terms of, it's all very well them coming up with, you know, new guidance or whatever, but I think that they're not that keen to actually enforce it or make people accountable. So, you know, I'd like to see people feeling as if, you know, they will be watched and they will be accountable. I think that's a role that we and others play in actually, you know, we have to spend a lot of time actually, I think, assessing how people are doing in terms of the current law, whether it's pension schemes and the pensions regulator or people in the FCA, and effectively doing some of the work that those regulators should be doing to check people are actually complying with the law. Yeah,
absolutely. So we've only got a few minutes left. Actually, it is racing away from us. So just another question, which I think is quite a kind of higher level question, perhaps, about you know, how our lives have changed in the last few months, how digital has become embedded really in everything we do, not just these kinds of interactions, but my children here doing their education, you know, all our shopping, everything now is online. And the question is really, how long do you think it'll take before environmental factors are incorporated into our lives to the same degree? You know, we've gone from digital being kind of compartmentalized to fully integrated into our lives. How long do you think it'll be before climate change can follow that similar kind of trajectory? Colin, why don't we start with you?
How's it affected me recently? Well, I've spent an awful lot less time on the train, which has been great. I live in the Northwest. I'm on the train to London a lot, for lots of meetings and stuff. I think one takeaway is that actually we can do a lot of that stuff on Zoom or others. And then that's, you know, there's obviously climate benefits from that sort of behaviour change. I think it comes back to maybe what I said at the beginning there, that we've shown that we can change aspects of behaviour quite quickly. And it's just about having the will to keep it up and to do things a little bit differently as we come out of it.
But it's like, I mean, people have said that the forced lockdown, 3 years of change was compressed into 3 weeks. You know, you had people who had to change their behaviour, and so they did. I mean, maybe we need a similar kind of approach to on climate change, where, you know, the driver is around behaviours that impact on climate change. I mean, you need the same kind of pressure to get society to move forward. I'm not quite sure where that pressure comes from, but maybe we need that kind of process. Any other thoughts?
What's been interesting has been the number of people who've actually commented on the, you know, the cleaner air, you know, the differences. People have noticed a huge amount of change, and I think quite a lot of people are questioning how they did things. So a lot of people want to see change. I think the question will be whether that, you know, as we get back into some sort of normality, whether people just want to go back to what was old. Right. I mean, a lot of people seem to be questioning a lot of the way we live and then what are the processes that we have, and, you know, the purpose of finance and all that sort of thing. And I think that's quite exciting actually, as people think about these bigger questions. Yeah, absolutely.
So just a final question before we welcome John back. So in terms of the, you know, this audience, the professional advisor community, how do you think they should be responding to this? What's the to-do list look like for them as a consequence of COVID-19 and the impact that it's had on our lives, and in particular how we think about climate change? Any particular ideas for professional advisors? Joel?
Yeah, I think one really useful tool is the funder commitment on climate change. This was an initiative started last year at the Association of Charitable Foundations conference, which was excellent. If I imagine a number of you were there, and the commitment now has many more signatories, and ACF are hosting that commitment, and it's a real simple starting checklist. You know, you start with education, you start with integrating it into your grant making, starting to look at aligning your investments, and there's 6 sort of simple things that give you a bedrock, because you come off a Zoom call like this and you say, oh, those guys, they were really interesting and it was all fascinating, but where do I go? That's a really nice starting point for people.
Yeah, very good. That sounds very helpful.
I'd add to that, there's also the Charities Responsible Investment Network has produced a set of expectations of asset managers, very high level, what sort of behaviour you want to see around voting on climate change resolutions, etc. I think there's a fair bit of stuff out there that should be useful. I mean, unfortunately, I would put advisors in the bracket of laggard in many respects, in terms of being on top of a lot of this stuff and being able to advise the asset owners in a way that they are seeking it out. So we had real trouble finding good advisors whenever we were reappraising our investment policies. So we basically found specialists and got NGOs to help us, got like-minded asset owners to share their experience. Unfortunately, the advisors had quite a lot of catching up to do.
Yes, it's always struck me as quite sort of odd, that actually, because in a way this agenda is something that should help them to develop stronger relationships with their clients. If you can speak to this broader set of issues, which everyone has a view on, and usually quite a sort of, quite a lot of appetite for, if advisors can find a way, perhaps using the guide that Joel's talked about, to actually, engage their clients around this agenda, that can be something that helps to cement those relationships. Joanne, did you have any final thoughts?
Just to add, I think really that, be educated, make sure you understand this. The questions are coming thick and fast, I think. So be ready to show that you actually understand that and are thinking about it, and not only can talk it, but actually, take action. Yeah. So that you've actually got some practical tools. There are tools out there, to assess things and to change. So just be ready to use them.
Yeah, I mean, just a final thought from me before I hand over back to John. I mean, I've been involved in sustainability now for 25 years. I've known Colin probably for 20 of them, but it's never felt there's this much energy behind this agenda. Particularly in the financial sector, everybody is piling into this sector. So you really have to have a response. I don't think the status quo has moved. And as an advisor, if you haven't yet got your head around this, then you kind of really need to, because everyone else is. So I think the pressure is building, that advisors need to begin to kind of educate themselves and engage clients on this agenda. John, did you want to?
Yeah, it's really interesting, Seb, what you're saying, because this issue is growing, and it's being client driven. And you're right about the benefits of talking to their clients about what motivates them, what their goals are, what their values are, and how they can achieve that. Climate may be one way, but there might be others as well. There are issues about how you measure an impact and that kind of thing. But I think the whole issue of returns is starting to settle down, and to see that you can do this and still get decent financial return. So the training stuff that we're doing for advisors, I think is really helpful around this. And it is so nice to have fresher air and less noise from traffic, I have to say. Yay. Yeah. Okay, 30 seconds, each of you. We'll start with Joanne, because I know you have to leave in about a minute. What are your final words of wisdom?
I think I have to finish as a lawyer and say, just don't think that the law is a barrier to any of this. The law is actually an enabler, and the law is changing, and I think that your legal duties adapt and evolve, and you need to be thinking about what is the current situation and the context now. So don't think what was right 10 years ago or 20 years ago. Think about your current position, think about what you're doing, and actually think about your duties, because you should be considering all of these issues. You should be considering ESG.
Great, thank you. Colin?
Well, I think when you're seeking to increase the social and environmental impact of your investments, where it differs enormously from seeking to maximize or secure financial return, is actually that there's an awful lot of goodwill and a lot of people out there in the same boat who are all willing to work together, share information, share intelligence, you know, point to what good looks like, what greenwashing looks like, whereas perhaps it's very much more of a cooperative goodwill approach, as opposed to whenever you're just talking about financial returns and nobody wants to share anything. And you know, from a perspective of I can maximize your financial returns, come to me. Where actually, if you were to say, I can dramatically increase your social and environmental impact, and come to me, and this network or this group of people can actually help you to achieve that. It's a very different kettle of fish.
Interesting, because if we combine dealing with income inequality, racial equity, and climate and other issues, I think that could be quite powerful. Joel, what's your final words of wisdom?
Yeah, well, I think we've seen a huge amount talked about climate. And in terms of funders, philanthropists and charitable trusts, they've actually spent less than 1% of their grant making on this. So to me, it seems like a huge opportunity that now is the time to move. I would say about a fair percentage, is 80 to 90% of your grant making should be tackling the biggest issue that the world faces. So there's a huge opportunity of what we could actually achieve if grant makers and philanthropists got behind this. And while you're moving to making that much grant making towards the climate, I would also say make sure that your assets are investing in new investments in solving the climate problems as well. And there's a huge opportunity there to make money while also solving what needs to be solved.
Great. Okay, so before I go, thank you very much, everyone. I know Joanne has to leave, but thank you for this. It's a really good start to a very important discussion. Seb, final word to you.
Oh, thank you very much, John. Thank you very much for organising these impressive series of events that you've put together over COVID. I mean, I guess my point would probably just to kind of underline that last point that Joel made, that as investors, you know, we also see this as about opportunity. I mean, climate change isn't just about risk. I mean, it represents an existential risk actually for us, but there are businesses that are providing solutions to these challenges, climate change as well. So there are opportunities as well to invest in companies that are solving this problem as part of their core mission. So I would encourage people not just to think about it as a risk, but also as an opportunity for their investments too.
Great, thank you. Sophia.
Thank you, everybody. Thank you all for joining us today. There will be a link to a survey when you leave. Please do take some time to fill it in. It really helps us improve the sessions and bring topics that are interesting to you. To learn more about the events we have coming up, please visit our events page on our website. Next week, our Walking My Shoes episode will be on cross-border giving as a topic, so be sure to join us. Have a good week, everybody, and thank you to all of our panelists for joining us today.
Thank you.
Bye, everybody.
Pleasure. Thank you.
Goodbye.